This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. In just the first month of this year, Indonesian policymakers have rattled global markets with restrictions on some of its biggest commodities exports, and more such moves are in the works. The resource-rich Southeast Asian nation banned coal exports for January, imposed restrictions on palm oil shipments by requiring mandatory domestic market obligations, and also floated the idea of an export tax on nickel pig iron, all within the opening weeks of 2022. While tight domestic coal stocks and high local edible oil prices were cited by authorities as the main factors behind the announced moves, Indonesia has shown before that it is prepared to disrupt raw commodity exports in order to aid the development of its domestic processing and refining sectors.
High global natural gas prices are breaking a two-year logjam of new U.S. liquefied natural gas (LNG) projects, with at least 3 of the multi-billion-dollar proposals likely achieving enough supply contracts to start construction this year, said developers and industry experts. A Louisiana project that received a green light in 2019 was the last wholly new U.S. plant to receive a go-ahead, benefiting from then-strong demand from China and utilities swapping to LNG from coal. A dozen others were stalled, first by the China-U.S. trade war and then by the COVID-19 pandemic and environmental concerns. But super-hot demand for the fuel in Northern Europe and China have pushed global gas prices to near record highs, reviving financing prospects for plants that chill natural gas into liquid for transport by seaborne tankers.
Moving on to the top news in the energy sector.
Oil prices rose to a more than 7-year peak on Friday and recorded their 6th straight weekly gain as geopolitical turmoil exacerbated concerns over tight energy supply. On a weekly basis, the benchmark contracts notched their longest run of gains since October. Brent futures rose 69 cents to settle at $90.03 a barrel, after hitting $91.70, the highest level since October 2014. U.S. crude closed 21 cents higher at $86.82 per barrel, after hitting a 7-year peak of $88.84 during the session.
Global coal prices have shot back towards record highs as the Ukraine crisis raises expectations that European buyers will start loading up on the fossil fuel for fear that a standoff between Russia and Western nations will cut off gas supplies. The benchmark Newcastle Coal Index has soared by over a third this month to $262 a ton, fueled initially by a month-long export ban by top supplier Indonesia and now by worries that any military engagement in Ukraine will sever gas supplies from Russia. Europe relies on Russia for around 35% of its natural gas, and has been grappling with a gas shortage since last summer that sent local prices to record highs late last year.
Next, we have the top news in metal markets.
China has set the first batch of its 2022 rare earth mining output quota at 100,800 tons, 20% higher than the same time last year, according to a government statement on Friday. China also set the quota for smelting and separation of rare earth at 97,200 tons, China's Ministry of Industry and Information Technology, MIIT, and the Ministry of Natural Resources said in a joint statement. This is also up 20% from a year earlier. China is the world's dominant producer of rare earths, a group of 17 minerals used in electric vehicles, EVs, consumer electronics and military equipment.
China's state planner will take effective measures to strengthen regulation and supervision of iron ore prices, it said on Friday. The National Development and Reform Commission, NDRC, said in a statement that it would also conduct investigations with relevant departments and severely crack down on illegal activities to keep iron ore prices stable. We will now look at the top news in the agricultural sector. India is likely to set aside about 3 trillion rupees, $40 billion, on food and fertilizer subsidies in its budget next week for 2022-23, officials said, roughly the same amount the government budgeted for this fiscal year ending in March. India's subsidy bills have spiraled due to pandemic relief measures for the poor and a sharp rise in global prices of chemicals. New Delhi has already raised fertilizer subsidies twice in this fiscal year, and sources said that its payouts for 2021-22 could be its highest yet. In the budget, Finance Minister Nirmala Sitharaman is due to present on Tuesday. The government will allocate 1.1 trillion rupees to fertilizer subsidies, and 2 trillion rupees to food subsidies, three officials told Reuters on condition of anonymity.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.